Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Sonali Basak. We're counting you down to the closing bell, and here to help take us beyond the bell, it's a global simulcast. Rejoined right now by a smiling Carol Massar, economics major, I'm told, and Madison Mills. No idea what she majored in, but she looks smart as well. Welcome to our audiences across Bloomberg Television, Radio, as well as for those folks streaming on YouTube. Crucial moments of the day. I'm not sure there's any one. This has really been all over the map here, but the end result, at least right now, Carol, looks like green across the screen.
Yeah, absolutely. Look at us, way off our lows of the session when it comes to the equity trade. We've seen yields come in. I do think about Jamie Dimon and his comments that he made on CNBC, this idea that maybe we do miss a recession. So maybe it's, investors thinking, Maddie, okay, we're going to continue to see higher rates, but look at the job market. It's strong. We're still out there spending. Maybe we will indeed get a soft landing or no landing at all.
Yeah, the consumer just continues that resiliency, right? But we also, Carol and I just talked with Ryan Dietrich. He's a technicals guy, and he basically said, well, the market's selling off because it's the end of February, and that's what happens at the end of February every year, Sonali. So I have to wonder whether or not this is just a little bit of the market doing what it does.
Yeah, and also there's a lot of herd mentality in this market. Let's remember how many of those herds fled right into the semis and things like NVIDIA right before this positive result. So a little bit of relief for some people who might have lost a lot of money last year.
Yeah, we should point out, though, you sort of add this all up. This is still a pretty range-bound market here, and you sort of wonder what's the next catalyst that allows this market to break out of that range, whether it's to the upside or to the downside, Carol.
Yeah, no, absolutely. And that's something I'm watching on those lows that we saw in the S&P last year, seeing to, make sure that we stay above it and don't take that out to the downside, Romaine.
A 200-day moving average on the S&P 500 of 39.40. We should point out at one point here on the day, it looked like we were going to test that to the downside, but it bounced off a couple of key support levels here, has us closing higher on the day, up about 21 points as we wait for these numbers to settle, or about 0.5%. Dow Jones Industrial Average higher by about 111 points, or 0.3%, while the NASDAQ Composite is going to close higher by roughly 0.7%. The outperformer on the day, that belongs, well, to a certain extent, Dow Transports, which are up 1% on the day. Russell 2000 finishing the day higher by 0.7%.
That's interesting to hear about transports. I'm going to go back to something we talked about earlier, and that's the semiconductor space. You mentioned it too, Romaine, several times. The Philadelphia Stock Exchange Semiconductor Index, the SOX, up 3.3%. So, Maddie, definitely some outperformance there.
I really want to take a look at a lot of these sectors here on the day because to your point here on semis, Carol, just look at that rise in semis, over 5% on the day. You got a lot of love there, helping the S&P higher on the day. As Romaine said, just dragged it right out of the doldrums. Transportation, energy, both up more than 1% on the day. Real estate, there's a lot of worries about that industry, but up almost 1% on the day. When you look at the red on the screen, you're not looking at as many sectors that were down on the day, but insurance, communication services, media, entertainment. You have food and staples and consumers. There's still some worries there, and you saw it in the red in the S&P today.
All right, that's your sector breakdown. Let's get to some of the specific gainers in today's session. And NVIDIA, man, it's just the standout. Top in the S&P 500 and NASDAQ 100, holding on to most of its gains for the day. At its highs, up 15%, closing with a 14% gain. You know the story. We broke the earnings last night. An upbeat forecast, and the company talking about AI in particular. This stock has more than doubled since the October 14th, 2022 low, and it just set off a rally in the whole semi space. So certainly an outperformer. Want to talk about something Romaine mentioned earlier, ANSYS. This one was up about 10.5%. Also top in the S&P 500 and NASDAQ 100. It's about a $25 billion market cap company. It's up about 20% so far. Software for engineering and manufacturing. Reported last night. Fourth quarter results beat. Company gave a full year forecast that analysts see as strong, especially, as analysts said, against a difficult economic backdrop. And one more for you, Dish Network, up 5% in today's session. Despite a fourth quarter revenue miss, analysts noting some positive signs that the company's wireless subscriber trends look promising. So that one, certainly some outperformance there, Maddie.
Well, I'm going to bring you your decliners here. We've got Netflix down by about 3.3% on the day. That is after the streaming platform lowered the price of subscriptions in over 100 countries. That was mostly in lower income regions where the company does have fewer customers, looking to gain a little bit of market share there. This could could be that kind of move, but this impacts more than 10 million subscribers. Investors not necessarily liking that move today. The shares fell as much as 5.2% on the news about those price cuts. And then I want to go to Dollar General. We've been talking about all week these consumer discretionary companies falling as much as 3.6% on the close after the retailer's preliminary earnings per share and sales for the fourth quarter missed consensus estimates. Really interesting to me to see how these consumer discretionaries are holding up this week. And then I'm going to end on Wayfair, down by its most in 9 months, down by as much as I think a little over 23% on the close. That is after worse than expected losses and a 19% drop in active customers. So again, Romaine, that could be related to changes in consumer spending, people looking for more services than goods at this point, but really interesting to see how Wayfair is holding up.
Yeah, interesting. A couple other decliners. Keep an eye on some of those EV stocks. Lucid had an awful day and a lot of concerns about softness when it comes to demand for some of those vehicles. Take a quick look at the yield space. A little bit of stasis here on the day. We talk about the big sell-off that we had over the previous few days that had pushed yields higher. Relatively unchanged here on the day, at least at the short end of the curve. But at 4.7 here, that's nothing really to write home about here on a 2-year yield. Your 10-year still camped out just under 3.9 here. About a 4 basis point move lower here on the day here. Then your 20-year and 30-year saw similar moves here on the day.
All right, so let's get to Warner Brothers Discovery. This is a stock that we know has been on a tear, up more than 65% so far this year. Coming out with fourth quarter numbers, key total subscribers, 96.1 million, a little bit light. Street was looking for 96.3 billion. Let's go to the top line, fourth quarter revenue. That too is coming in light, 11.01 billion. The Street was looking for 11.23 billion. And then if we go to the earnings per share, fourth quarter loss per share, 86 cents. The estimated loss was for much less than that, a 13-cent loss. So, you know, Romaine, to see the stock, which has been on a tear here, no surprise to see it down about 4% in the after hours.
Yeah, interesting. I'd be curious to see what they say on the call, because this looks like this could become now more of a cost story rather than a growth story here. We did get a few other earnings, too. I don't know if we can hit a booking real quick on the travel space. I know you keep a close eye on that, Carol, but their revenue in the fourth quarter did come in slightly above estimates at about $4 billion. The Street was looking for about 3.9, and adjusted EPS also came in well above Street estimates at 24.74 versus an estimate on average of 21.51. I'm not really seeing any guidance in here just now, but overall, when you look at gross bookings, when you look at revenue, when you look at the number of room nights sold, all of these metrics appeared to come in higher than what the Street was expecting, at least for the fourth quarter.
Yeah, Romaine, I'm glad you bring up those room nights, because another area I'm looking at from booking is rental car days sold, up by 27%, and then airline tickets sold also up by 61%. So that consumer demand for travel just saying so sticky, according to those earnings, Sonali.
Yeah, I wonder how the market's going to soak all of this in tomorrow, because Warner Brothers is certainly a large company in the game here, but this is some positive signs that people are still spending money when you're looking at booking holdings, and the market after hours, of course, is reacting well to it.
All right, so we've got entertainment, we've got travel. How about some Beyond Meat?
You like football?
Yeah, I want to go to Beyond Meat.
No, forget Beyond Meat. Look at this. Jeff Bezos hires an investment firm to mold. This is the headline, and our readers need to know this. The Washington Commanders, of course, we know they've been in play. This is a big NFL football team in Washington. Jeff Bezos hires an investment firm to mold a Commander's bid. We should point out this is according to the Washington Post.
Another billionaire buying a sports team.
Yeah.
Wait, have I
Isn't he also in the Washington Post?
Exactly.
All right, no, listen,
quite the scoop there.
there's a ton of money. You know, we have the Business of Sports podcast. We do a lot of shows. There's tons of money in sports. Well, check out that cover story on Business Week.
Business Week story, that's a big one.
Well, here's a forecast for
the shares up 11%.
Beyond Meat sees 2023 net revenue of $375 million to $450 million. The estimate is for $394.2. What is Beyond Meat doing in the after hours here? Let's pull it up if we may. That stock, just taking a look, it's up 10% in the aftermarket.
I just said that like 3 seconds ago.
I don't listen to you. It's up 39% so far this year. So
not bad.
No, exactly.
Yeah. I mean, you're seeing a lot of love come back into these stocks. You know, we're also waiting for Block to report too, if you believe it or not. I mean, that's a stock that's up more than 17% on the year as well. So a lot of love coming back into these names. You've got to wonder how long that lasts and what the earnings really mean for it.
Yeah, absolutely. And I mean, Beyond Meat, of course, one of the really big beaten down type stocks out there, and whether they can turn that business around or whether this is maybe just a one-off here remains to be seen. I feel like that's the story, though, with a lot of these companies that we're getting at. I know we're going to get Carvana a little bit later, talking about a company that's been beaten down here. But the question is, what is the longer-term story here? Is this going to become a growth story once again, or is it going to be much more about keeping costs under control and maybe trying to I guess to a certain extent, almost shrink the business a little bit in order to sort of restabilize it?
Yeah, we've been talking to a lot of guests, Romaine, who always, the big thing that they're talking about is pricing power of these companies and making sure that they continue to have that as much as they can as we face some of these macroeconomic headwinds.
All right, and just, keep in mind, Beyond Meat, very high short there. So you're seeing probably some covering. Quick headline, Boeing halting the 787 Dreamliner jet deliveries. There you have it from the Wall Street Journal. All right. I guess that's a wrap. That'll do it for our cross-platform coverage, radio, TV, Bloomberg Originals, and, of course, on YouTube. We will see you again for Beyond the Bell, same time, same place tomorrow.